This is Craig Haugard with your Financial Issues Ag Update for November 30th. Well, yesterday saw corn futures trade lower in sympathy with the wheat market, a strong U.S. dollar, and good South American rain showers this past weekend. Weekly export inspections were neutral, coming in about as expected at 30.2 million bushels. At the close, the March futures were 9.5 cents lower as they settled at $5.8225 per bushel. The soybean market was pressured lower by the beneficial rains that fell in South America over the weekend. Traders believe that Brazil has a monster crop in the works, and they also expect that the Brazilian harvest is going to come earlier than normal this year, which could have a negative impact on the amount of export business that the U.S. captures. Weekly export inspections for this past week were better than expected at 78.7 million bushels. At yesterday's close, we had the January soybean futures 11.25 cents lower, ending the day at $12.41.5. Wheat market was lower as traders focused on what appears to be a record Australian crop and Egypt's ginormous wheat purchases that went to Russia, Romania, and Ukraine. The current Russian wheat export tax of $80 per metric ton does not appear to have slowed the Russian export business as much as their government had been hoping for. Wheat prices drew additional pressure from a strong U.S. dollar, which is thought to make the U.S. less competitive in the world market. From a technical perspective, it was interesting to see Chicago futures go up and fill a gap that had been left last week before trading sharply lower. At the close, Minneapolis March futures were 3.25 cents lower at $10.4525. Kansas City was down 11.75 cents to close at $8.5725, and Chicago futures were 18 cents lower for the day, ending the session at $8.2225. Well, cotton futures gapped lower on Friday, and they spent yesterday trading within Friday's trading range. Now, it would be unusual if we didn't go back and take a run at filling that gap. To do that, March futures would have to get up to $115.15 to get that gap filled. We're getting close to the end of this season with 85% of the cotton crop now harvested. At yesterday's close, we had March futures down 37 points, settling at $111.41 per hundred. Livestock futures were weaker. At the close, February live cattle were down $1.90, closing at $139.30 per hundredweight. January feeder cattle were down by $1.42.5 as they settled at $165.72.5 per hundred. In February, lean hogs were a bit lower as well. They were down a dime as they closed at $80.92.5 per hundredweight. Class 3 milk futures had a fairly wide trading range, but finished a bit softer for the session. At the close, the December futures were 16 points lower, settling at $18.16 per hundred. And meat cutout values were mixed. Choice box beef ended the day $2.43 lower, closing at $2.7758. Select boxes dropped by 26 cents to settle at $2.6202. Pork carcass cutout values, on the other hand, got off to a strong start for the week. They were up $3.73, settling at $87.71 per hundredweight. This has been Craig Haugard with your Financial Issues Ag Update. We'll be right back with more financial issues after this.